Consumer stocks are plummeting, down 3.05% this week, with a bearish trend in low RSI of 47. As inflation fears intensify, this is what every serious investor needs to know about consumer right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. As we navigate the market this week, we are seeing normal conditions, with the VIX at 19.0, indicating a relatively calm environment. In this context, the consumer sector is underperforming the S&P 500, and the sector ETF, XLY, has declined by 3.05%. This underperformance raises important questions about the sector's health and its potential impact on the broader market. Given its significant weight in the S&P 500, the consumer sector deserves attention right now, as its trajectory can influence overall market sentiment. The sector's performance is closely tied to consumer spending, which is a key driver of economic growth. As we assess the sector's prospects, it is essential to consider various factors, including earnings trends, consumer confidence, and the impact of inflation. This educational content is not financial advice, and our goal is to provide insights and perspectives to help you make informed decisions. Let us start with the technical picture and what the charts are telling us. The consumer sector, as represented by the XLY ETF, has been exhibiting a bearish signal, with a weekly change of negative 3.05% and a monthly change of negative 0.94%. The RSI reading of 47 implies that the sector is currently in a neutral to oversold territory, which could potentially lead to a bounce or a consolidation phase. The trend direction is downward, with a moderate level of conviction, suggesting that the momentum is still skewed to the downside. Key support levels likely exist at the recent lows, while resistance levels are likely to be found at the previous highs. The current move does not appear to be a sustainable breakout, but rather an extended overreach, which could lead to a pullback or a period of consolidation. This week, we will be watching the technical setup closely, particularly the ability of the sector to hold above the support levels or break below them, which could lead to a further acceleration of the downward trend. The RSI reading will also be closely monitored, as a move below 40 could indicate a further increase in downward momentum. Now let us look at the fundamental catalysts driving this sector. The consumer sector is a key area of focus for the week of May 18 to May 22, 2026, with a range of fundamental drivers at play. From a macro perspective, the sector is likely to be influenced by the upcoming PCE inflation data, which will provide valuable insights into consumer spending habits and price pressures. The normal market conditions and a VIX of 19.0 suggest a relatively stable environment for consumer stocks. Key stocks such as AMZN, TSLA, MCD, and Nike are signaling a positive trend for the sector, with many of these companies reporting strong earnings and revenue growth. The retail and auto segments are expected to be particularly strong, driven by pent-up demand and a rebound in consumer confidence. The luxury and discretionary segments may also see a boost, as consumers continue to prioritize experiences and high-end products. As we consider the longer-term fundamental thesis for the consumer sector, it is essential to remember that this is educational content and not financial advice. Overall, the sector appears well-positioned for growth, driven by a combination of macro tailwinds and strong company-specific fundamentals. Next, let us talk about the specific risks you need to manage this week. The consumer sector is facing several key risks this week, primarily driven by concerns over inflation, consumer spending, and global economic uncertainty. Given the current volatility environment, with the VIX at 19.0, investors should think carefully about position sizing to manage downside exposure. Unexpected headwinds, such as supply chain disruptions or unexpected changes in consumer behavior, could also impact the sector. To mitigate these risks, investors should adopt a disciplined framework for managing downside exposure, including diversification and regular portfolio rebalancing. By taking a proactive approach to risk management, investors can help protect their portfolios from potential losses. It is essential to remember that this is educational content and not financial advice. And now for the strategic outlook, where does consumer stand heading into next week? This week we remain cautiously positioned in the consumer sector, citing slowing growth trends. A key theme to track is the impact of inflation on discretionary spending. Please remember this is educational content and not financial advice. For more insights, like and subscribe to Financial Market Oracle, and comment your consumer watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.